Hello everyone, welcome back to another stock value video. In today's video, we are going to talk about the Intel Corporation and discuss the questions such as how far could Intel go from here? Does it still make sense to buy at these levels? Why has stock been moving sideways recently? How much more profit potentially could there be? I believe by the end of this video, you will have answers all those questions. Not only will you gain a better understanding of Intel stocks, but you will also pick up the valuable technical analysis concepts that can be applied stocks as well. So without wasting any time, let's jump right into the analysis. As many of you, Intel moved from around 41 on March and 30s all the way up to approximately 133 by May 11. Right now, as you can see on the chart, the stock has entered the consolidation phase. The reason for the simple, after such a massive rally, the stock has reached a level where it needs to some time to rest and digest those gains. At this point, the 125 area has become an important psychological resistance level for us. On the downside, this region here should be considered to potentially buying zone. We are talking about the roughly 102, 108 range. That's the area we are currently watching. Now the big question is how long will this sideways movement continue? Most likely, we will continue move back and forth within this range before making the next major move. In other words, based on what we are seeing right now, the stock appeared to offer buying opportunity around 107 $108, while profit taking opportunities appear to closer $125. The distance between those levels represents roughly a 20% move, which is actually a very attractive trading range. Let's see how quickly the stock has been able to generate those returns. The most returns peak occurred on May 11. After sellers the steps in, the stocks pulled back until the May 19. Then from the May 19 to May 29th, it rallied once again. So within about a month, the stock essentially provided two separated opportunities for the gains of around 20%. For short-term traders, these are very respectable returns. As you can see here, we also have 50 days moving average on the chart. At that moment, the stock is finding support for this moving average. So what happens if 108, $107 support zones break? If that level is lost, there's a good chance the stock could be revisited to gap area that is previously jumped over. It may attempt to fill that gap. There is an old principle in the technical analysis that says the prices often feel the need to reconnect with the moving average that are trailing beneath them. In a way, market psychology tends to pull prices back towards those support levels. In fact, on the May 19, we already saw the stocks tested the 50 days moving average. Yesterday, it could break below it, and today, once again, we are seeing the buyer steps in around the 107 area. Looking at if the current buying zone fails to hold, we could potentially see a move back towards the $73, $75 range. Now, here's the part I want to pay a very close attention to too. If the area above us get broken, things could become very interesting. Let's draw Fibonacci retracement from the bottom of the move, the recent high. The 133 levels currently represent the stock's all-time high. If Intel managed to break above 133, then I believe the next target we will be watching are approximately 153 and then 168. Those levels could be reached relatively comfortable if a breakout occurs. However, when we look at the stock's history, we notice a pattern. After major rallies, the stocks often spend some time moving sideways. Yes, there had been periods where it moved in a zigzag pattern, but there have also been lightly consolidation. For example, between January 21 and March 21, the stock spent a considerable amount of the time trading sideways. The lower boundary was around 42, while the upper boundary was near $58. The consolidation lasted roughly 3 to 4 months. So now the question became We will see another 3 or 4 month consolidation period here, or we will a strong piece of the news arrives and push the stocks sharply higher once again. We will have to wait and see. For now, from a purely technical perspective and independent of any news events, this is what the chart is telling us. If you've been paying attention to volume, you will probably notice something interesting as well. Since the gap up move, when we have seen increased trading activity entering the stocks. Before April 23, average volume was roughly in the 30-35 million share range. Now the average has increased to around 40-42 million shares. What does tell us? It tells us to that money flowing through to the stocks. Some investors are entering, some are exiting, and significant activity is taking place. The stock is being actively held, and we are not seeing the sign of a major distribution phase. Historically, there haven't been many large-scale sell-offs in the stocks either. The last, the last significant decline to occur around June 30, 2024, while Intel dropped approximately $20 per share. And from that point, we've been seeing stocks climb all the way to where it is today. If you have made it this far into the video and you are not subscribed to the channel yet, consider subscribing. Don't forget to like and to share this video as well. It really helps the algorithm and to support us the channel more than you might think. And honestly, it's a pretty easy thing to do. Thanks for watching, and I will see you in the next video. Take care, everyone.